Happy Sunday. Hope you're enjoying your weekend and getting ready for the upcoming week. This is Simon with AvaTrade, and we are starting our weekly webinar. They called your weekly trading plan. And for regular people, of course, that's not a new thing, but I just want to say a few things about the new people. And of course, a special welcome to you. What we're trying to do here is actually not to predict the future, but just trying to get more organized. And as you know, in all the aspects of life, we can see better results if we prepare by planning, by spending a little bit of time as creating a plan or structure. And as I always like to quote what traders like to say, you plan your trade and then you trade your plan. Again, there's no guarantee, but definitely there's more organized way of doing things. A few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. My overall trading experience is over 23 years. I started as a prop trader back in June of 2000. I did it for about 11 years in New York City. And after that, I went into a less stressful environment. And I started also to mentor and educate other traders. And I'm very happy that I have this great opportunity to assist our customers at AvaTrade. The agenda of the webinar, we talk a little bit about the big picture, then we talk about indices, stocks, commodities, Forex, pretty much the same structure every week. A risk warning, you can find a full statement at avatrade.com website. And what we do here, it's purely educational. Of course, we do not suggest any trades. The channels, I highly recommend for you to follow and subscribe. You have Telegram, you have Twitter, and my favorite YouTube channel. And why is it my favorite? As most of the information there, you have tutorials, educational material. And if you missed the webinar, you can find it there. The recordings of webinars are being posted. You can subscribe, click on the bell. You'll be notified when new things coming out. And it's very easy and practical. We have busy life. And if you can't attend the live webinar, you can always go back and watch it in recording. Okay, so we'll start with the big picture. And as you know, unfortunately, there's a lot of tension in the Middle East. There's war in Israel. There is a lot of negative things happening, let's put it this way. And it definitely affects the markets, affects everything. Those safe haven triggers happened. As you could see, gold is running. Swiss franc is running as people are looking for some safe parking for their money. Normally, Japanese yen would be running as well, but because of the value of it, we'll talk about it when we get to the Forex. So those things are happening, as you know, it started on the 7th of October, and the whole focus, anywhere you go in the news, it's talk about Gaza and Israel and other countries involved in support of the US and other things. So I'm not going to tell you anything new, and this is not a political discussion or war discussion here. We discuss markets, but definitely the geopolitics are affecting the markets in a big way. Also, Friday, we had a speech of Powell at the Economic Club of New York. And his speech, he talks about the yields. And that's why I just brought you here the picture of the 10-year yields. We hit almost 5 on Friday. We hit the 499 and closed at 491. These are the levels of 2007. Huge moves, and that also puts the pressure on the markets. Of course, we all know the interest rates are high. And also Powell spoke about a possibility of pausing interest rate hikes on the next meeting on November 1st. And of course, it all dependent on how the economic data will come out As you know, the goal of Fed is to bring the inflation 2%. As of now, the inflation stays high. So let's see how the upcoming numbers will be affecting that. We have a little bit more than a week till the next decision on November 1st. So that's kind of a big picture, right? Also, let's take a look at economic calendar, what's waiting for us in the upcoming week. And I just want to mention a few things before we go into details. So, especially for new people, economic calendar is a public information. You can find it with us on the web trader or the app. You can also Google any third-party provider. This is not a secret information. Like I said, it's a public information, and it's available to everyone. Now, is it important to follow it? I believe yes, whether you do something with it or not, but to be aware of certain things coming in a certain day and time, it's important because you can avoid surprises just in case you have trades or you're about to enter the trade or exit the trade, whatever the station might be. So here, what I do, I take out only the high impact events. There's much more. You can filter through them. You can see what's relevant to your trading, the instruments that you trade, the location, or the country, or the continent that you trade. So these are the things in the upcoming week. On Tuesday, we have employment data from UK. We have PMI data from Germany, following by PMI data from European Union as a whole. You have a governor of Australian banks speaking on Tuesday as well. And we have a bunch of PMI data from the UK and also US. So a lot of PMI data on Tuesday, you can say that. Wednesday, inflation numbers, CPI numbers from Australia. You have interest rate decision from Canada. Canadian dollar has been weak lately, as we'll see in a moment. So similar scenario. They announced the interest rate and then the statement and then press conference an hour later. With Powell, it's half an hour later. So that's all about the Canadian dollar on Wednesday. Thursday, we have another decision from European Central Bank and the statement as well. And that's on Thursday, and the press conference as well, following the statement and the announcement. Also, we have the GDP numbers from the US. That's all on Thursday. And the CPI numbers from Japan. Definitely, everybody's looking very closely to those numbers. As just to remind us, the Bank of Japan is the only major bank that hasn't done anything in increasing the interest rate, but they said that towards the end of the year, depends on the inflation, they will start increasing the rates. We are currently on the rates in Japan at the negative territory, minus 0.1%. Okay, and also the numbers that Powell mentioned on Friday in his speech. Here, they just one part of it, which is a big part, the CPI numbers from US, and that's on Friday. So we have a lot of economic data coming up. Just to remind you again, there's much more. What I did here is I just took the high impact events. All right. Let's open the trading platform now. And I have it on China. As you could see, we speak about China pretty much every week. And the economy there is really taking a huge dive. It just continues, right? We know they have issues with they had issues with COVID, and that slowed down a lot of aspects in the economy. That includes a big part of it that has a big downside pressure. That's the real estate aspect. As you know, the few big developers filed for bankruptcy or failed to pay their debts. So China is really, really moving south, if we can use that expression. With China, as you know, I always mention four instruments. That's copper, copper, oil, Australian dollar, and New Zealand dollar. So let's just take a look at them briefly. So we have crude oil. Friday was down, but before it was up, definitely that's because the conflict in the Middle East. If the conflict was not there, we would see probably oil tanking together with China. We have copper. So you could see a lot of downside pressure here. We'll talk more in details when we get to commodities. Australian dollar as well, and New Zealand dollar, it looks like is the weakest. So that's as far as China. Now, by the way, Nikkei that was holding pretty strong this past week, the Japanese index starts selling as well, given to the global sell-off on the equity markets. Now, if we take a look at U.S. indices, the S&P 500 broke below the 200 moving average. It's a bearish sign or continuation of the bearish mood. And this is the first time we broke below the 200 moving average since March of this year. And as you could see here, we are approaching the level of the previous support around 42.40 levels. We closed at 42.45, and we pretty much sold the whole week with the intense selling on the high volume. So this is a real selling going on, as we know. And on Friday, S&P fell 1.3%, and for the week, down 2.4%. So as you could see, there's a lot of pressure, and if you see on the weekly chart, we are looking, as I mentioned, to breaking or testing the low of 42.35. That was a 2 weeks ago. So that's S&Ps. If you look at the Dow Jones as well, as a straight down line, also we are shopping for the next support, and the instrument fell 0.9% on Friday, and the weekly loss of 1.6% for Dow Jones. And of course, the tech index looks weak as well. On Friday, it fell 1.5%, and for the week, it lost 3.2%. As you could see here, that is on NASDAQ. Okay, and on S&Ps, I just looked a little bit at the research. All the sectors of S&Ps were down. Those are 11 sectors in S&P 500. And the tech and energy stocks were down 1.7%, and financial sector was down 1.5%. So as you could see, a lot of pressure. If you browse really quickly through European indices, the situation is even worse. We just broke through the recent support on DAX. FTSE or UK 100 as well. French index is diving, and as you could see, the indices are falling. A lot of panic, a lot of it to do. There were some articles last week. I don't know if you follow that. They said that both the stock prices and the interest rates are high, so something needs to give. And of course, with the pressure, there's some earnings coming out. We'll talk about a few of them when we get to the stocks. And I think a lot of pressure. It's kind of uncertainty and fear of what's happening in the Middle East with the war, and who possibly can get involved and what could be the outcome. So we definitely will be following this upcoming week on developing news and facts from the region. Okay, let's take a look at a few stocks. We'll start with Tesla. It's a popular stock with a lot of people following. As you could see here, the 240 was the key level. We mentioned it a lot of times. As you could see, Thursday, the stock just went down, and Friday continued, and we closed below the 200 moving average here. So the reports, the earning reports missed some consensus. They reported third quarter revenue at 23.35 billion, which was up 9% year over year, but the estimate was at 24.38, so the company missed the earnings consensus, if you want to put it that way. Also, there were comments from the Elon Musk, from CEO, said that due to the interest rate, there's some slowing, and they need to further cut some prices and so on. You can go deeper into the fundamentals, but it looks like the shareholders and the public didn't react so positive to the outcome, and the stock sold. So we are kind of at the 200 moving average. Let's see in general how this week will play as far as the markets in general, and we might see continuation to psychological level of 200 maybe. But if you see over here, we had the low of 212.22 at mid-August, so we could be finding support here. I mean, we're not going to guess. We'll see what happens. Nobody knows how the week will play out as far as geopolitics and other things. So that's Tesla. Netflix, on the other hand, had a nice run. By the way, before I go to Netflix, it looks like Elon Musk lost quite a few billions. That's what the reports say here. Again, that's just the numbers. Netflix had good reports, and the stock gapped up, as you could see here. They reported earning per share at $3.73, and it's up from $3.10 a year earlier. Also, they announced on Wednesday that they're raising the price for their memberships, all of them, by a few dollars. So the stock gapped, and there are a few good expectations, including, I mean, different analysts, they're putting a different price target on the stock, some of them at 500, 510. I just took the number. JP Morgan's raising the price target to 480. Currently, we're trading at $400. So again, if everything plays well, we might see continuation to the upside. It also depends on the market. As I like to say, on the tanking market, even the best stocks are going to go down. As you could see here, even though on the tanking market, Netflix managed to gap and hold that gap. So that's a very strong sign. Let's see what happens this week. AT&T as well reported a good numbers and revenues and nice projections. So the stock was up. As you could see here, also gapped. And if you remember, I mentioned a few weeks ago on this move to the upside when they reported that some big trades took place. And if you remember, I mentioned that there's some news are coming out that somebody knows something. You know, they say, as traders like to say, you buy the rumors, you sell the news. So after the correction, we came back to the same levels around 1570. The high here was at that point 1570. So Deutsche Bank is also raising the price from $22 to $23 per share. So potentially that could mean that AT&T will continue. But then again, we'll see what the market in general is doing. So that's AT&T. Pfizer, we spoke about Pfizer a few times. The stock is selling. And on the 20th, there's a report that FDA approved for the, it's hard to pronounce this name, Penbria vaccine, and I'm quoting here, to protect adolescents and young adults from meningococcal disease. Okay, apparently that news didn't affect the stock yet, so maybe it's not that serious. But in general, the stock is selling. As you could see here, we just hit the 200 moving average on the monthly chart. On the daily, we're way below anything, or all the moving averages. Now here we can take a wild guess where could be the next stop. Here we had the low of 27.87, and that was back in March of 2020 with the pandemic move. So the stocks looks super weak. Just to remind you, we spoke about it last week, that they expecting shortage in the revenue by about 9 billion due to the slower sales of vaccines. So it looks like they're dumping the stock. Sorry to use that word, but it looks like it. So that's as far as the major things. I want to take a look at Teva Pharmaceutical. We spoke about the stock a few times. If you remember, the original idea was the swings between $7 and $11. So we almost hit the 11 back in September. We hit 1070, and since then we've been falling. It looks like the whole pharmaceutical sector is not doing that great. Maybe Pfizer is leading that, just my speculations. So at some point we might find that support again, and it could be $7, it could be $8 at some point, and definitely we'll continue watching for that possible reversal and continuation to the upside. All right, so that's as far as Teva. Now, a lot of stocks are reporting this week, and just to mention a few names that are reporting on Thursday, big names: Microsoft, Alphabet, which is Google, Meta, which is Facebook, and Amazon. So let's just take a quick look at them. We have Microsoft. Where are you? Let's take a look at daily chart. Microsoft is holding actually very nicely, steadily. We're still above the 50 moving average, so it could be that the earnings could be good. For some reason, the stock is not selling as the others do. Google is selling, but also above the 50 moving average. It looks very strong. Facebook, just Meta as well. So all those giants are still really holding nicely. So that means only one thing, that this week Amazon is weaker though, right? You see it below the 50 and 100, and it's approaching the support. So as these big guys are reporting on Thursday, that will be the make it or break it on the earnings, right? Because they haven't made the move, and these are the biggest percentage holders on the indices. So definitely it's going to be a fun week to watch. Now we have, I'm just going to read to you all the major ones that are reporting. So on Tuesday, you have Coca-Cola, General Electric, General Motors, Spotify, Verizon, Visa. On Wednesday, you have Boeing. By the way, Boeing, we can actually take a look at the stock's been selling. If you remember last time I mentioned that they had some inspection on 737 that is potentially will slow down the production or sales. The stock is selling, and on Wednesday, Boeing is reporting earnings. Also, we have T-Mobile, IBM. On Thursday, we have Ford, Intel. Let's take a look at Intel, by the way. Where are you? Here you go. Intel is also holding with the big guys. It could be this trend line is being tested. That makes sense. As you could see, we're actually right on the trend line. So that's Intel, UPS, Chevron, and ExxonMobil. Okay, let's take a look at these guys. As they had a little bit of a move up on the oil moving higher, and Friday sell-off, and Chevron is holding stronger than the Exxon. So these two guys will be reporting earnings on Friday. So busy week, okay? Definitely will be watching that. Okay, let's move to commodities, and we'll start with the ones that we mentioned. Crude oil. As you know, crude oil historically or traditionally would really fly up in the conflict, especially such a serious conflict as we're having now in the Middle East region. But for some reason, it's not. So I think it's being affected by the China sell-off, of course, and in general, uh, economic kind of turbulence globally. As you could see, the major indices are falling. So we'll be watching oil for the next developments. As of now, it looks like 90 level is resistance. Before that, we had the resistance around 91, which we briefly broke through on the 27th of September, and then we came right back. And 91 was a strong resistance and remains as of now. So that's crude oil. Copper. We spoke about copper is going parallel with China index. We are consolidating here. A reason being it was a strong support back in May. We hit the 354. Then we played with that number again in beginning of October. We had the fake breakdown here, came right back. So this level around 350, 354 is the current support on copper. It looks like it's holding it, but it's really, really building a strong pressure to the downside on the chart here. All right, as we mentioned, gold is being a safe haven. It plays nicely a typical textbook scenario when things are falling, money flowing into the safe instruments. As you could see here, we hit the high of 1997 on Friday, and we are testing this previous resistance that happened a few times. First, as you could see here, it was a strong support back in April. Then further in May, it became resistance. Then it proved to be resistance in July again. Then we had the sell-off, obvious lower lows, lower highs. We came on this panic sell-off on the yields going higher. That was the main reason, and dollar flying. And then, as you could see here, that happened until October 5th. October 6th, we had the first intense, not the intense, but a reversal here. And over the weekend with the war, it was a gap. And since then, we've been flying, and it's clearly a safe haven scenario here. So on gold, we have to watch this level here, current level where we are at, for possible breakout and building support, or building another resistance and moving lower. Of course, silver, kind of a small brother of gold, tries to do the same thing, similar moves over here. And another thing before we move to Forex, natural gas sold. If you remember, we mentioned this level, 346, we hit after breaking $3 finally. And the last 2 days of the week, we back into below $3 level. Let's see what's next here. We might confirm this level, and that becomes resistance, or we might fly right back and start building another support above and going to retest the high. So natural gas definitely worth watching. All right, let's move to Forex, and we start with dollar index. That's been strong, and we are in some consolidation now after breaking this level of resistance here from March. We broke it first time the end of September. A lot of actions around this level. That's around 106, right? We hit the high on the 3rd of October, the high 107.03, and we are holding this level here, 105.90, 106. So with that, also, as you could see here, we mentioned a while ago that the 50 moving average is above somewhere from the end of September, which signals possible continuation to the upside as The analysts call it the golden cross when 50 moving average is crossing above the 200. So we are holding, we're consolidating here. So we might move higher. So you could see in the weekly chart, it looks clear here. We might move higher and retest the highs of last year. We might consolidate and then dive below and go into correction mode to the downside. With that, of course, if you take a look at the major currency pairs, they all are selling. And yen, as I mentioned, that we'll talk a little bit more about, normally would be safe haven together with gold and Swiss franc. But because of the weakness of the yen, it's not a priority at this point as a safe haven. But anyway, if you see at the dollar yen, we are stuck at this level around 150. We tried, take a look, we tried to break it beginning of October. We had few crazy moves during the day when the yen moved 2%. Some say it was intervention by Bank of Japan. I don't know if there's a confirmed fact. And in any event, we are stuck to this 150 level and not moving any higher, and the pressure is growing. So let's see, maybe after this week's CPI numbers from Japan, we'll see some decisions from Bank of Japan, which would add strength to the currency. So that's Japanese yen. USD CAD has been strong as well. We have some interest rate decisions this week. That includes Canadian or Bank of Canada as well. And the two currency pairs that were super weak because of China, especially, and that's Australian dollar and New Zealand dollar is the weakest out of most of the major currencies. You can say it that way. And we'll see how this week will do. And here's your Swiss franc. Dollar had a very nice run from July. And after double top here, we've been selling, even though on the strong dollar, the Swiss franc has been overpowering it. But the good thing for the dollar here, we have another scenario here developing, which is 50-day moving average above the 200. Okay, so let's see if this will mean continuation and retesting the highs for US dollar. Okay, now let's take a look at other pairs with Japanese yen. As we mentioned, it's kind of a clock ticking. It's a matter of time. It could be happening this week or it could be happening December, as they said, but by the end of the year, they're looking to start acting in increasing the interest rate. So this is yen or euro yen. This is pound yen. We are in the tight channel here, waiting for some moves. This is your Canadian yen, which is trading around the strong resistance after which was a sell-off. You have Aussie yen consolidating as well, and New Zealand as well is weak against the yen. So that's your yen, and the Swiss franc pairs, as you could see. Here's your proof that Swiss franc is super strong. I think it's the strong. If you take all the major currency, it looks like the Swiss franc is the strongest and New Zealand dollar is the weakest. So here's your Euro CHF selling, Pound CHF selling, Aussie CHF at the support, very interesting level, and New Zealand CHF at the support after a huge sell-off as well. And here's your Canadian CHF, also a huge drop. So we can clearly say the CHF is the strongest currency and New Zealand dollar is the weakest. So let's see how this week plays again for the major currencies. And let's wrap it up with our hero, which is the Bitcoin. As you could see, if you remember, we spoke about it. There's the speculations about the ETF. There's a move to $30 on the 16th. Came right back, and we are actually currently playing with that number. We currently trading at 29,923. So that's 30,000 is being retested. And I always say, the saying, as I mentioned a lot, you buy the rumors, you sell the news. So I mentioned what this move happened, most likely somebody knows something, and even though there was not proven evidence of the ETF being opening. But if this move happened, they will try to retest it and see how real it is. So we are at 30,000. Let's see what's next. There's a lot of actions, a lot of expectations and anticipations. So if we do break this 30 and start building strong support, we might be opening a next level for the prices to move. Okay, so that's it pretty much. Again, just want to remind everyone to subscribe and follow our channels. If you're watching this on YouTube, please put likes, of course, only if you like it. Share with your friends if you think it's useful. Subscribe and hit the bell. I want to thank everyone for participating. I want to wish everyone a great productive week and safe and positive, of course. And I wish that all of us can meditate and pray that this terrible chaos in the Middle East will end and no more people should die. And just to put it all together, what we spoke about this week for the upcoming week, we are having a lot of announcements that includes the interest rate decisions from Europe and Canada. We have a lot of stocks reporting their earnings, continuing the earnings season. And we have the major ones are reporting, especially on Thursday, which you have Microsoft, Alphabet, Meta platform, which is Facebook, and Amazon. So a lot of pressure on the markets. Let's see if these earnings or the major earnings will play the role either on recovery of these recent losses or continuation to the downside. And of course, the further economic numbers are there for the Feds to watch as we're approaching their decision on November 1st. Take care, all the best, stay safe, stay positive. We'll see you next week.